Time now for business. We say hello to Yuka Royer.
Hi, François.
Ever since Emmanuel Macron called a snap legislative elections, we've been watching what they call the spread, the gap between French and German bonds. There's fears that the French deficit may be spinning out of control.
Well, we'll come to that bond spread in a minute, but yes, the European Commission has just recommended disciplinary action against France and 6 other countries for running excessive budget deficits. Under the Maastricht Treaty, EU member states are required to keep public debt below 60% of GDP and deficits below 3%. The bloc's executive branch examines each situation and determines whether the overrun is temporary and within acceptable range. The rules were suspended, of course, during the COVID pandemic, but were reimposed this year. Now, on Wednesday, the Commission named 12 member states with deficits above the threshold and named 7 of them, France, Belgium, Italy, Hungary, Malta, Slovakia and Poland, that are not doing enough to bring them under control. Now, disciplinary procedures could result in a penalty of up to 0.1% of GDP. For France, that would be about €2.5 billion.
Today's report is the first step in the process of opening an EDP. It will be for the Council in July to adopt a decision establishing the existence of an excessive deficit in those member states, and the EDP recommendation on the correction of the excessive deficit will be proposed only in November.
Yeah, and this is particularly an issue for the likes of France and Italy.
Yeah, in the south. Let's have a look at how France and Italy, for instance, compare with Germany. All of them spent a lot of money to support businesses and households during COVID and in the wake of Russia's invasion of Ukraine. But then, as the economy rebounded, the EU urged governments to phase out support such as energy subsidies. By 2022, Germany had brought its budget deficit below the EU's 3% limit. But France and Italy kept the level high last year, and Paris also plans to keep overspending this year. Same goes for public debt. French debt amounted to over 110% of GDP and is set to increase this year, while Germany has brought it down pretty close to the 60% limit. The Commission says even if France is a much bigger economy than some others it singled out, that doesn't mean that there's more room for overspending to be tolerated.
I think it's obvious that the decisions in a framework of our fiscal and macroeconomic governance need to be done based on the facts and whether the country respects the treaty reference values for deficit and debt, and not based on the size of the country.
Last week, markets tanked after Emmanuel Macron's snap elections announcement. How are they doing this Wednesday?
Yeah, they recovered slightly after last week, but today in the stock markets, Paris ended the day nearly 0.8% following that warning from the EU. And London rose mildly as inflation in May in the country fell back down to the Bank of England's target of 2% for the first time in 3 years. Now, you mentioned the Eurozone bonds earlier, and bond yields rose this Wednesday as the gap between French and German 10-year sovereign bonds widened once again, meaning it's become more expensive for France to borrow compared to Germany. The gap, though, still below a 7-year high hit last week in the wake of President Macron's call for a snap election. Wall Street is closed for a Juneteenth holiday.
Wall Street, which on Tuesday soared, and it's an AI-related stock that's fueling it.
Yeah, one company, that company is Nvidia, the company making advanced microchips that power computers running on artificial intelligence. Now, it has now overtaken Microsoft to become the world's most valuable company. Tuesday's flows meant that Nvidia's market cap is now more than $3.3 trillion. That's about the size of France's GDP. Brian Quinn has more on the firm's stellar rise.
A meteoric rise. Nvidia has surpassed Microsoft to become the world's most valuable company, topping $3.33 trillion in market capitalization. Accounting for a 10-to-1 split last week, its share price has nearly tripled since the start of the year, adding roughly $2 trillion in value so quickly that the company hasn't even yet been added to the Dow Jones Industrial Average. Some analysts worry that the party could come with a hangover.
Investors have to own these stocks If not, they're just taking too much risk relative to the market. But if something should happen and those stocks should start to fall, it's going to take everybody down with it.
Behind that rapid climb is an artificial intelligence boom. Nvidia represents 70 to 95% of the market in highly sophisticated GPU processors that are required to train and run generative AI applications like ChatGPT and Gemini. The companies that own those AI bots, from OpenAI to Google to Amazon X and Microsoft, are all snapping up chips like the H100 accelerator as fast as Nvidia can make them. The AI gold rush has sent CEO Jensen Huang's personal net worth from $44 billion to $119 billion. It's also lifted the shares of rivals like Qualcomm, ARM, and Micron. It's even boosted shares in utilities firms, as investors predict all that processing power will mean higher demand for electricity.
Ryan Quinn with that report, and that's it for business.
All right, many thanks. Yuka Waye will be back with more business news